Hello, my name is Fred Amrine, and welcome to College Affordability, a website that focuses on how to lower the cost of education. This program will focus on the financial aid process and how need-based aid is determined. This video is a little bit longer than the prior ones, but we've gone through all of the components of the financial aid process. Now this video will bring it all together to understand how the financial aid process really works. So if we've talked about the cost of attendance and how that gets pulled together, and you have to factor in your personal living expenses as the biggest variable there, how the EFC calculation works, what schools will use both the FAFSA process and an independent methodology based on the schools you're in. Then you'll get merit aid, which is the free money, which can be based on your academic abilities or special talent that you have. Need-based aid, we'll see in this calculation of how that's determined in the next slide. Also, what the school's financial strength is. What's their merit package? This is not really public knowledge that a lot of people have. We have it in our database, but it's very difficult to get. And then understanding the student's academic ability and their family's financial position will determine how all these things come together and how much you will get for your need-based aid if possible. So there's a few things here. We're looking at two different schools. One school cost of attendance is $20,000. Another school is $40,000. We've completed the financial aid form. This process, we're just talking about the FAFSA process, so their schools are both using only the federal methodology. And as you can see, no matter what schools we're applying to, our EFC number is the same. So at school 1, we're $25,000, and at school 2, we're $25,000. It doesn't matter what the cost is. In case number 1, we can see that we don't qualify for any need-based aid because the cost of attendance is less than the EFC. The 25 is greater than the 20. But because we filled out the financial aid package, or the FAFSA process, we do qualify for a Stafford loan. It will be unsubsidized, but we qualify. This would be for an entering freshman for $5,500. In school 2, we can see that our cost of attendance is greater than our EFC number. So we have a need of $15,000, and yet the school will come back with a award of $12,000. Just because you have the need doesn't mean the school will come back with 100%. Within that $12,000, most likely you'll get the $5,500 of the Stafford loan. The rest could be made up of, we talked about the self-help or merit money or grant money, a mixture of those things. So you may get some free money, you may get some self-help money. So just understanding that not all schools will meet 100% of that need is an important factor. So paying for college is just not the financial aid process. We've talked about this a few times in previous videos. The financial aid process is just one way that you can lower your out-of-pocket cost of education. But understanding how your EFC number comes together, what schools you're considering attending, is all important in that positioning. There's college savings plans, especially if your state offers in-state tax incentives, which some states do. It's a great resource, not just on the pre-side, but also while the child's in school, and to prepay your tuitions into those plans can be very helpful and a great saving tool. There's various tax strategies. There's the opportunity credit, which is the most popular one, but also other strategies with gifting and things like that for the higher income people that you can use that can really lower your out-of-pocket cost. A very confusing portion here is financing. What financing options do you have? Which ones do you want to use? Again, the financial aid directors cannot talk about all of these aspects, and professional help may be required here, but financing options is really another important part that you need to really look at in what you're planning to do. Another downfall here also that the schools do and most of the other programs do is they only give information 1 year at a time. You need to take a 4-year view of this at a minimum, and especially if your student needs postgraduate work, if they're considering medical school or a profession that requires a master's degree, it's important you have at a minimum a 4-year cash flow and decide who is going to be paying what at what point in time, or at least try to envision their life both from a income level and debt level at age 25. And here's where we're talking about what is the financial outcome and academic outcome of the college you're selecting. So we talked about the environment, we talked about the academic strength of each school, and also what the financial need or policies that are available at the school you're planning on attending. Hope this information has helped you. Please consider other resources on this website on college affordability. And if you need professional help, please give us a call. And to learn more about loan repayment, loan forgiveness, visit Repay 401. It's a great resource. Thank you and have a great day.